Are you wondering whether to classify someone as a W-2 employee or a 1099 contractor? It's one of the most important decisions a business can make, and getting it wrong can lead to very expensive mistakes. Now, if you're watching this, you might have a mix of full-time employees and independent contractors, or maybe you're looking to hire some to help take a few tasks off your plate. Whether you're just starting out or have been in business for years, every time you pay someone, it creates a tax obligation requiring you to track their compensation. That means you'll need to provide either a W-2 or a 1099 by January 31st of the following year. As a CPA who's spent many years advising businesses just like yours, I know that making sure you understand when to use each form is crucial. Employees receive a W-2 while independent contractors or freelancers receive a 1099. Though the forms themselves are straightforward, understanding which one to use can get tricky. My name's Noel and I'm a registered CPA and an OnPay expert contributor. In this video, I'll explain the purpose of the IRS Form W-2 and IRS Form 1099 NEC tax forms, when to use each one, and how the IRS determines whether someone should be classified as an employee or an independent contractor, plus other important considerations to keep your business compliant. Let's dive in. What's a W-2? If you've hired someone as an employee, you're required by law to issue them a W-2 for any wages they earned during the year, regardless of whether they made more or less than $600. This form plays an important role in helping employees file their taxes, and it also ensures that the IRS can verify the income reported to them. The W-2 details an employee's total earnings for the year, along with the amount of federal, state, and local taxes that have been withheld. You'll also need to report amounts withheld for Social Security and Medicare. Even if the total wages are small, if you've withheld any taxes from an employee's paycheck, you must issue them a W-2. For employers, this isn't just a paperwork obligation. If you miss the deadline to issue a W-2 or fail to issue one at all, your business could face penalties from the IRS. The fines for not filing or filing a W-2 late can range from $60 to $630 per form in 2023. That's depending on how late the form is and the size of your company. By providing W-2s on time, you not only help your employees stay compliant with their taxes, but you also ensure that your business stays in good standing with the IRS. Keeping organized records and staying on top of deadlines is key to avoiding unnecessary headaches and IRS penalties. What's a 1099 NEC? Now that we've covered W-2s, let's dive into the exceptions, and that is independent contractors. If you've paid anyone for their services who doesn't qualify as an employee, you'll most likely need to provide them with a Form 1099 NEC. The 1099 NEC, non-employee compensation, is the form you use to report payments of $600 or more made to independent contractors or businesses that aren't incorporated. Think of this form as the equivalent of a W-2, but for non-employees. Contractors and freelancers are responsible for paying their own taxes, and the 1099 NEC helps them and helps the IRS track this income. Let's go over some examples. Maybe you hired seasonal workers to help with extra tasks around the holidays, or you bring in a freelance graphic designer to create marketing materials for an event. Both would be classified as independent contractors, and if you paid them more than $600 over the course of the year, you'll need to issue them a 1099 NEC by January 31st of the following year. Unlike employees, contractors don't have federal or state taxes withheld from their payments, which is why getting the 1099 NEC right is so important. This form also helps the IRS verify the income contractors report on their tax returns. For your business, issuing 1099s correctly helps you stay compliant with tax rules, and failure to file these forms can result in fines similar to W-2 penalties. Now, the distinction between W-2 employees and 1099 contractors comes down to the nature of their work and the relationship with your business. Contractors generally have more control over how and when the work gets done, while employees tend to follow a schedule and use company-provided resources. Getting this classification right is important because classifying employees as contractors can lead to problems, IRS audits, and penalties. Employee versus independent contractor. How do you tell the difference? So how do you know if the person you're paying is an employee or an independent contractor? This is where things can get a little tricky. Worker classification isn't always clear-cut, but it's important to get it right. Misclassification can lead to tax problems and penalties for your business. Generally, employers make this determination based on how the work is performed and the relationship with the worker. However, if there's confusion or disagreement, the IRS can step in to help make a final decision about whether someone should be classified as an independent contractor or an employee. The IRS uses three main factors to help determine whether a worker is an employee or an independent contractor. Number one, behavioral control. If you control how and when the worker performs tasks, then they're likely an employee. Contractors, on the other hand, typically have more freedom over their work schedules and the methods on how they actually do the work. Number two, financial control. Employees generally use employer-provided tools and receive regular payments. Contractors, on the other hand, often invest in their own equipment, and payment is usually based on invoiced services. Number three, type of relationship. Employees often have long-term relationships with benefits like health insurance, paid time off, things like that. Contractors typically work on a project basis and don't receive these types of perks. Classifying workers correctly is very important in order to avoid penalties. Employees follow set schedules, use company resources, and receive regular pay, while independent contractors have more autonomy and freedom and independence. Just because reporting for a 1099 independent contractor may be simpler, it doesn't mean it's the right choice. Let's go over some additional considerations for worker classification. Worker classification can sometimes be tricky, but there are a few additional tools and guidelines that can help you ensure you're making the right decision and avoiding potential legal and financial headaches. Number one, IRS Form SS-8. If you're unsure about whether a worker should be classified as an employee or independent contractor, the IRS offers Form SS-8. Employers or workers can submit this form to the IRS to request an official determination of the worker's status. This is really helpful if the work relationship is unclear or if you want to avoid any future disputes with the IRS. While the IRS's decision may take some time, filing this form can help protect your business from making costly misclassification errors. Number two, impact on workers. Misclassifying a worker doesn't just affect your business. It can significantly impact the worker too. Employees are entitled to certain benefits like health insurance, workers' compensation, and unemployment benefits, rights that contractors generally don't have. If you misclassify as an employee as a contractor, they could lose out on those protections, and in some cases, they might be able to take legal action to claim those benefits back. It's not just about taxes. It's about ensuring that workers are classified fairly so that they receive the rights and protections they're entitled to. Number three, future tax implications. Misclassifying workers can lead to significant financial repercussions. If the IRS reclassifies workers after an audit, for example, your business can owe back taxes, including both the employee and employer share of Social Security and Medicare taxes. You could also face penalties and interest for missing deadlines, which increases over time. Additionally, fines for misclassification can range from hundreds to thousands of dollars per worker, depending on the severity. For small businesses, these costs can really add up quickly, making it very important to classify workers correctly from the start to avoid long-term liabilities. So what are the risks of getting this wrong? Misclassifying workers can lead to costly back taxes, penalties, legal disputes, and even damage to your business's reputation. To avoid these risks, proper classification is essential, and consulting a professional can provide you with peace of mind. Now, states have their own classification rules as well, and misclassifying a worker with your state can result in similar penalties, back taxes, and similar disputes. Regarding the risk of lawsuits, misclassified workers can potentially file legal claims for benefits like health insurance, overtime pay, or even retirement contributions. In short, properly classifying workers is essential to avoid these risks. If you're unsure, consulting a tax professional or using a payroll service like OnPay can help ensure compliance with both federal and state laws. Now that you've got a clearer understanding of when to use W-2s and 1099s and the risks of getting it wrong, you're now in a better position to keep your business on track. Whether you're managing employees or working with contractors, knowing which forms to use can help you avoid costly mistakes and stay compliant. Remember that getting worker classification right is essential for protecting your business from penalties, audits, and even legal challenges. And if you're ever unsure, professional payroll services like OnPay are here to make the process smooth and hassle-free, ensuring that your payroll and tax forms are handled properly. We hope you enjoyed the video. Please click the subscribe button below for more small business insights like this one, and we'll see you in the next video. Thanks for watching.